So friends, like we did the solutions for direct method of cash flow statement, now we are going to calculate the numbers for indirect method of cash flow statement. As you can see friends, we have the indirect method of cash flow statement format here, and this starts with net income, right? Net income is there, then non-cash charge like depreciation expense is there, then gain or loss on sale of equipment is there, which is basically a non-operational earning or loss. So if it's a loss, it will be added back. If it's a gain, it will be subtracted. Then there is change in accounts receivable, change in inventory, change in accounts payable, etc., etc. One key thing we have to remember here when we are doing the calculations for change in receivables, inventory, prepaid expenses, accounts payable, etc., etc. The one key thing is that if there is an increase in something like inventory, or if there is an increase in something like receivables, that represents a net cash outflow. So increase in inventory, increase in receivables, etc. represents a net cash outflow. So the entry of that change value will be negative. Contrarily, if there is an increase in accounts payable, or if there is an increase in interest payable, or if there is an increase in tax payable, then that represents a net cash inflow. And likewise, they will be added as positive entries. The increases in payables and liabilities will be entered as positive entries, and the increases in receivables, inventory, etc. will be entered as negative entries. Now, with that being said, we start the calculations, friends. So first is the net income. It is clearly mentioned in the income statement. We directly entry it. This is a positive number. Then there is a non-cash charge, which is the depreciation expense. This is also entered as a positive number. Then there is gain or loss on sale of equipment. Now this is a non-operational item. So if there is a gain, we have to enter it as a negative number because it will be deducted from cash flow from operating activities. So here we see there is a gain. So we enter it as a negative number. Negative 512.5. Change in accounts receivable. Now we have to see if there is an increase or decrease, friends. Accounts receivable 2530 minus 2392.5. There is an increase of receivables here, friends. So if the receivables have increased, this represents a net cash outflow. So the entry will be negative. Same goes for inventory. Again, there is an increase. So this again represents a net cash outflow. This will be entered as a negative number. Change in prepaid expenses. Let's see if it has increased or decreased. This has decreased. So a change in expense has decreased. There has been a decrease in expenses. This means this represents a net cash inflow. So the entry will be positive. Change in accounts payable. Change in accounts payable. Again, we have to see if there is an increase or decrease. There is an increase. So this will be a positive entry because this represents a net cash inflow. Change in salary and wage payable. This is equal to change in salary and wage payable. First, let us see whether it has increased or decreased. This has increased. So a payable has increased. Obviously, this represents a positive number or a positive entry. Change in interest payable. $155 minus 185. The interest payables have decreased. So there is a net cash outflow. This will be entered as a negative number. Change in income tax payable. Let's see if there is an increase or decrease. There is an increase. So this will be entered as a positive number or a net cash inflow number. Change in other accrued liabilities. 2815 minus 2760. These liabilities have increased. So this represents a net cash inflow. So this will be a positive entry. Now we will be summing them up to get our CFO, cash flow from operating activities. 6515. Now we come to cash flow from investing activities. First line item is cash received from sale of equipment. This has to be calculated step by step. First we find out the value of the equipments after selling of the old equipment. That is value of the equipments that are left in the balance sheet after selling of the old equipment. This is equal to total equipment value minus the purchase price of the new equipment. So this is 21995 minus whatever price you have given to buy the new equipment. This is basically the value of all the equipments except the old equipment. Now we have to find the cost of the old equipment. The cost of the old equipment is basically value of the other equipments except the old equipment adjusted from the value of the equipments including the old equipment, which is 21387. This value includes the old equipment, and 18745, this does not include the old equipment or the new equipment. So if we subtract 18745 from 21387, what we are left with is basically the historical cost of the old equipment. So which is 2642. Now this is the historical cost. To find out the depreciation adjustment, we have to do more calculations. First thing we have to find out is the change in accumulated depreciation. Change in accumulated depreciation. This is equal to 1380. Now this value, if you adjust it from the depreciation expense for the period, what you are left with is basically the depreciation adjustment from the old equipment. This is equal to 2630 minus 1380. The depreciation adjustment is 1250, which implies that the net cost of the sold equipment, that is depreciation adjusted cost of the sold equipment, is 2642 minus 1250. 2642 minus 1250. This is the net cost after deducting the accumulated depreciation of that equipment, right? Now we have a gain on this. The gain is over and above this net cost, and the gain value is 512.5. So we add 512.5 with 1392.5. The net value comes at 1905. This is the cash received from sale of the old equipment. Cash paid for purchase of new equipment, we already know that, 3250. So this will be a negative entry because this is a cash outflow. Now we get the net cash used for investing activities. This is equal to 1905 plus negative of 3250. The value is negative 1345. So this is net cash used for investing activities. Now we come to cash flow from financing activities. First line item is cash paid to retire long-term debt. Cash paid to retire long-term debt. First we have to see if there is a reduction in long-term debt. 7867.5 minus 8937.5. There is a reduction, and the reduction value is 1250. So this is the cash paid. So this is a cash outflow from financing activities. Entry will be negative. Cash paid to retire common stock. This will be, let's say if there is a decrease, 9375 minus 10875. So the decrease is 1500. Again, this is cash paid, so this will be a negative entry. Cash paid for dividends. Cash paid for dividends is basically net income minus increase in retained earnings for the period, right? So let us find out first if there is an increase in retained earnings. This is equal to 9915 minus 7190. Yes, there is an increase of 2725. So 5525 minus 2725. This is equal to 5525 minus 2725. This is equal to 2800. But remember, this is cash paid, so this is a cash outflow again. So we represent it in a negative form. So this is negative 2800, which implies net cash used for financing activities is the sum of the above three items. 5550 negative. Now net decrease in cash. This is equal to CFO plus net CFI plus net CFF minus 380. There is a decrease in cash. Cash balance in 2023 is the beginning cash value. We adjust it for 380. So 2907 minus 380. The value is 2527.5. This is exactly the value mentioned here. Right? This is exactly the value mentioned here. So again, we have deduced the indirect method of cash flow statement from income statement and balance sheet. Congratulations.